Hey there, amazing listeners. If you love diving deep into soulful conversations on Mirror Talk, we need your help to keep the dialogue alive and thriving. Subscribing, sharing, commenting, and rating our podcast not only shows your support, but also helps us reach more beautiful souls like yours. Every review and share helps our community grow, bringing more voices and perspectives into our reflective journey. So, hit that subscribe button, leave a comment, and spread the word. Together, we can make Mirror Talk shine even brighter. Thank you for being a part of our journey.
Pause. Take a break. Reflect on life. Your moment of greatness starts now.
In this episode, we will discover the financial freedom that is within the reach in real estate. Helping us with this is an experienced mortgage broker, author, and the founder of Wealth Marathon. And just before we start recording, I found out also that he's a podcaster. Welcome to the show, Brighton. How are you doing?
I am good, Toby. Thank you so much for having me. And thank you for that introduction as well.
Thank you so much. I mean, you've done so much, and you've achieved so much, and there's so much value that I'm looking forward to, from learning from you in this soulful conversation. So, I just like us to start start just from you. Like when I prepared for this conversation, I got to read about your goal to achieve financial freedom before you, and I think around when you get to 40 or something like that.
That's right.
So I just like to know what motivated you to set that goal of achieving financial independence by the age of 40.
Um, to be honest, it's a random goal. It just came to my mind. I don't know. One day I was just going through it. No, it starts back from I'm originally from Nigeria, so my parents immigrated to Canada when I was a kid. And when we
Mm,
came to Canada, my parents struggled quite a bit learning the Canadian system because when we were in Nigeria at the time, this was like in the 90s that we came to Canada. It was still what we call like a cash-based system. What I mean by that is there was no credit, right? And then when my parents came to Canada, it was predominantly a
mm,
credit-based system. So you go from having to have the money that you need to buy something to being able to
mm,
buy something if you can just afford the minimum payment. So that's a huge shift in terms of how your brain
mm,
thinks when it comes to money. And my parents struggle. So growing up, I watched my parents just struggle with money. And I think that watching them struggle with money made me kind of develop this appetite that I wanted to learn more about money, how it worked. And my
yeah,
hope was that if I learned how it worked with money, that maybe then I can make things better for myself and also be able to help my parents out. So fast forward to
mm,
when I was working the financial sector, done some different roles, financial advisor. I started to also learn why my parents got in trouble. That it wasn't just the lack of knowledge; it was also the way that the system is set up, the financial industry as a call, right? It's not really
mhm,
designed to have someone like me who, like, if you put me in the bank setting, I'm very good in the sense that you may like me as a person. You may say, hey, this guy seems like a reasonable person. But the way I get compensated is really not based on giving you necessarily the best advice because I have a family I have to feed. And a lot of the ways the banks are set up is based on like getting fees off you. Like either they're charging you interest or they're charging you a fee. So I went
mm,
in the financial industry thinking, hey, I'm going to help people who are like my parents, who maybe don't have the education. But then I found it was also challenging because when I would sit in front of someone that was like my parents, I had to make a choice. Do I give them the right information or do I try to sell them
mm,
something else that can help provide for my family? So I really didn't like that. And as I got older, I just realized the real freedom that you get in life and anything you do is really comes down to you being able to do what you want when you want. And that's
mm,
where I started to kind of purchase real estate. I started to learn a little bit how it worked. And I felt like it was probably the best tool to help you get there quicker. Though I think it's changed
mhm,
now with the whole, real estate around the world is very inflated. But generally the concept of real estate still works. So I came up with this goal. I was like, you know what really truly makes me happy isn't necessarily having like a large home or whatever it is. Those are kind of tricks to keep you to kind of keep on the wheel to keep going. So I want to create a
yeah,
plan where I wanted to just be financial independent. And when I say that, I don't mean like I want like $1 million or anything like that. It's just my definition of financial independence is like, do you control what you do with your time? And that can be literally you make $40,000 and you do that. Great. Right? To me, you're financial independent. And that's the goal I'm trying to get to. Now, for me, it's a little bit high because have a certain lifestyle that I enjoy. I love traveling. So I need a little bit more money. But in general, that's where that came, that desire to sort of want to be free from this idea that I have to do things that someone says to me, or I have to work somewhere that I really don't enjoy working. So I set this goal to say, by 40, I want to be financial independent. And furthermore, when I worked in the bank, I realized a lot of us were told to retire at 65, and we never questioned why 65. Like, why did they come up with that number? Why couldn't it be earlier? Right. So I realized that number is just a made up number. You don't have to wait till you're 65. What you have to do is work backwards and go, okay, what does it look like when someone is 65 and they retire? Well, they probably have no debts, they have their mortgage paid off, and they're living off a pension income or some kind of income, right? So you can do the
Yeah.
same thing earlier. You just have to set it up. And that's where that goal came from is I really just wanted the freedom. I don't want to be attached to people. I don't want to feel like I have to do something. And that's what I've been working towards. And I'm hoping I get there at 40. But I just want to put that out there to let people know, like, you can do this too. It may be 41, it may be 38, it might be next year. I don't know. But I know for sure it's coming
Yeah.
sooner than later.
That's very true. And that's very encouraging. Like, it's always nice to have that goal in front of you. Like, not just to have a billion euros or pounds sterling or dollars, but to have that freedom to be able to live the life that you want to live and live it according to your own terms. Also, that's freedom. That's independence. That's true.
Absolutely. 100%.
Yeah. Just on a lighter mode, I mean, when I asked you that question, I had a different version of the story in my head because you are from Nigeria and I'm also from Nigeria. So I was like,
Yes.
oh, maybe your parents told you we did not move to Canada for you to just go and be living a medical life. You have to make money, my son. And I was like, okay, maybe that was what motivated you to say, hey, I have to make daddy and mommy proud and
Yeah.
I have to become a billionaire before the age of 40,
No,
basically.
my parents have been pretty good. I mean, my parents are Nigerian parents, but I would say they're not typical Nigerian parents in the sense of like, they were and like all parents in Nigeria, I would say education is big in Nigerian culture, and but part of that is
Yeah.
also as you get older, it's because of they want you to get a good job. So early on, yes, my parents would say, be a doctor or anything, but I couldn't be a doctor because I can't stand the sight of blood. So that doesn't really work. If you're going to doctor, I was like, well, that's not going to work for me.
Yeah.
What really drove me was just seeing my parents' experience, and it shows the impact of your environment because a lot of things you want to do is either maybe you're younger, you want to solve something, or you have an experience, you're like, oh wow, that really had a profound impact on you. For me, the profound impact was seeing my parents struggle financially, and that kind of was seared in my
Mm.
brain. And I was like, okay, you come from this place that wasn't quote unquote good. You leave in there, you come to this world, and you're just struggling, just getting by day to day, right? And a lot of it was
Mhm.
just like, especially if you come from like foreign, coming from an immigrant, we have this mindset as immigrants, which is we tend to work really hard, but we don't spend enough time actually learning how the system works. Now, this is
Mm.
more susceptible for immigrants because they come here with basically their hand and their work ethic. But in this system,
Mhm.
in this developed system, the people that actually make more success aren't necessarily the people who are the hardest worker. It's more about the people who have more knowledge and are willing to understand how the system works. So that's where my parents were lacking. And the thankful thing is my parents, particularly my dad, was very huge on education. So I always love learning. I love meeting new people. I love learning new information. It gets me excited when I learn something new that's different from what I thought it was. So you put those two combination, and I also had the work ethic from my parents because I'm an immigrant kid. I have the work
Yeah.
ethic, but what I did better than my parents is that I apply more my knowledge, so I don't work so hard. But if I have to work hard, I'm tend to be more successful because I already have a really strong work ethic to begin with that they've cultivated in me.
Yeah, I love that, and I can totally relate with that. I mean, for me, in my own case, it's just hearing my parents' story,
Mhm.
and also seeing what they went through to achieve what they achieved made me to say, okay, they sacrificed so much for me to have the kind of life that I have. I would love to build on that to even do more and also have a better life for, yeah, the next generation, basically. And that's what
Absolutely.
keeps me going, basically, keeps me motivated. Yeah.
Absolutely.
And that's why I also learn about your World Marathon. You have this company, and you have the program too. So I'd like to know what World Marathon means and how I could make use of it to achieve my financial freedom.
Sure. So Wealth Marathon was sort of like, so when I was thinking that goal that I said I'm gonna retire at 40, I started to think, well, what am I gonna do in my free time if I get there? Because I don't want to be at 40 and stop
Yeah.
working. I
Mm,
always had this business idea when I was in university that when I was working at the bank, I didn't like that I always had to sell people product. Because really what I realized is like, oh, the way you create wealth is actually learning, spending time with someone who's achieving something that you're wanting to achieve and get inside their brain, understand how do they think, how do they, I play basketball, right? And I always put
mm,
this analogy like if I want to be a great basketball player, what we normally do is we learn from other great basketball player. The same principle applies to money. If you want to be good with money, spend more time with someone who is better than you with money. You may not be quite as great as them, but you're going to be better than where you were before you met them. So for
mm,
me, that's how I approach finances is I try to teach people the things that I've learned about it to increase their knowledge so they know a little bit
mm,
more and then they can get to their goals faster. So Wealth Marathon came out of that desire. Now, back in when I was in university, to create a company, a financial company where you essentially can deal with clients, it costs a lot of money. And I didn't have that money. I remember talking to my dad about this and I'm like, Dad, it's gonna cost like $200,000 to get this company up and going. And
mm.
again, 200,000 doesn't seem like a lot in 2024, but if you go back, 15 years ago, that was quite a bit of money to come up with, right? Um,
That's true. That's a lot.
yeah,
Yeah.
exactly. So I didn't have it. I had this vision of what I wanted. I want to be an independent shop. So fast forward to now, we have technology. You can do courses, you can do online, people can meet more frequently. So Wealth Marathon is really just a place to allow me to give the space where I can tell people what I've learned about money. And if you're interested in it, you can sort of get a little bit of insight into how my brain thinks, how things
Mm,
work. And that's really important because unfortunately, the world we live in is most people will tell you that you should go buy a product. The courses are there, but it's not really the course that you're buying. What you're buying is an insight into how I think about money, how I approach money. That's what you need to actually understand to then develop it based on your skill set to make yourself successful. So, a wealth marathon, the setup is pretty simple. I have courses that I do. So, for example, I try to tackle the major things that I think people are going to want to learn about. So, if you're looking to buy a home, I have a
mm,
course on that. If you're maybe renting, because that's a big thing nowadays, is a lot of people can't afford to buy a home. And I created this course because I think there's a misconception between the idea of renting versus owning. It's like we have this if or not. It's either you own a
mm,
home and you're successful and everyone claps for you. And if you're renting, well, you're just not working hard enough. You need to work harder. So I created a
mm,
course to sort of help you understand how these two things work and really understand what it means to be a renter and how you can create wealth while you rent. And I have other courses when I do certain things in my life. Like, for example, we bought a land in Belize, and I created a course on how that process works, like how I went about buying land in Belize. So the idea with Wealth Marathon is really a place where you can get education. And then in addition to that, if you feel the need that you want to then work with me one on one, I have a structure where I can do that. But the great thing with the one on one is I don't sell any financial products, and that's by design. Not because I can't,
mm,
because I do have certificates where I could set up the company that way today. I just don't want product to be involved. I'm working with a client right now, and one of the greatest joy he tells me is like in the 2 months we've worked together is like he tells me I've thought about money differently and started questioning things that I didn't even think about in the 2 months that I've
mm.
worked with you. And to me, that's success. When you can then
Yeah.
start thinking differently about money and start questioning, like, why am I doing this? Why does this really matter to me? Because so many people think it's about the $1 million, but that's why they never become successful because getting to $1 million is very difficult. But if you could actually understand what is it that you want from this life, what is it you want from money, and then find someone that can help you navigate that, that has more knowledge than you do, you can probably reach your goal faster. So, in a nutshell, that's what Wealth Marathon is a really an online platform for you to learn about money. And I do it in a way where it's all video based. But in addition to that, if you want to work with me one on one, you can also do that. But you don't have to worry about like going to the bank, and be like, I'm not gonna pitch like, hey, Toby, do you want a new credit card? Like, we don't talk about that. What we're talking really is
Yeah.
about your life. What do you want, right? I talk about
Mm-hmm.
things that I take all those experiences from when I worked at the bank, and I start to help you plan, where you want to go. If you're trying to get to retirement, we start thinking about like how much money do you really need, like, and make it easy and approachable for you to do that. So in a nutshell, I don't know if I answered, went kind of long winded, but that's what Wealth Marathon is: a place for me to have
Yeah.
something to do when I do reach this retirement goal, so I can give back, and also a
Yeah.
platform where people can get the education the bank doesn't give them because they're too busy trying to sell you products that makes them money at your cost.
Hey there, podcast enthusiasts. Are you ready to add a little sparkle to your day? If you're loving the insightful conversations and captivating stories on Mirror Talk Podcast, here's a friendly nudge to hit that subscribe button. By subscribing, you'll never miss out on the empowering messages and thought provoking discussions we bring to your ears. But wait, there's more. We're all about spreading positivity and inspiration, and you can be a part of it too. How? By sharing the love with your friends and family. Share this episode with your loved ones, and let's create a ripple effect of empowerment and growth together. And hey, if you've been enjoying what you hear, why not take a moment to leave us a glowing 5-star review? Your feedback fuels our passion to keep delivering content that resonates with you. So hit that subscribe button, share the love, and leave us a review. Let's keep the conversation going and spread the Mirror Talk magic far and wide. Thanks for tuning in, and remember, your support means the world to us.
Mm. Yeah, I love that. Once you get to your milestone or to that goal of financial independence that you set for yourself, then you want to give back. That's
Yes,
a beautiful thing
absolutely.
to do. Yeah, yeah.
And
So
I,
I like you to,
just to add to that, Toby, sorry to cut you off, but the
yeah.
giving back is
Mm,
because one of the things I see nowadays is capitalism. I love capitalism because to me, honestly, the idea like you and I can create a platform and reach all that, those are great. I think what's happening nowadays is like there's a lot of what I like to call like fake perceived capitalism, which is the idea
mm,
that like people really are not wanting to compete with each other, right? They're really trying to create businesses where they give the illusion that you can do it, but really it's
mm,
not possible because only a few people are doing it really well. So one of my thing with money is the same thing with money. I'm just like, look, if we all want a fairer society, we all have to increase our knowledge because think about it. If I tell Toby how to go about buying real estate properly, it's going to be harder for someone else to take advantage of you. Why? Because the cost for them to do that is going to be very high because your knowledge is also equally high. So they're gonna go,
mm,
well, I can't take advantage of him because he doesn't know. He knows just as much as I do. So that therefore their behavior is gonna be more in line to actually just do the right thing for you because it costs too much for them to try to take advantage of you because your knowledge gap is just as high. What's happening in
mm,
society is we have some segment of the society that has really high knowledge and too many people have no knowledge. So therefore it's easy for someone like me, if I'm not being ethical, to pitch something or say something that sounds good, but because you don't have the knowledge, you actually don't know if it's good or not. So Wealth Marathon is my weird small contribution to say, look, at least I can say the resources on there for you to educate yourself, because I think if we all educate ourselves, increase our knowledge a little bit more, we therefore make it harder for each of us to take advantage of each other. Therefore, we all do the right thing because it doesn't make sense economically for me to spend $20,000 to try to take advantage of Toby if it would just cost me 5,000 to do the right thing, right? Like
mm.
that's the
That
reality
makes
we're in.
sense. Yeah, that makes a lot of sense. Yeah. And I'd like to take you back to the discussion about renting versus owning, because this is something that has been coming up in my, with my friends, for example, talking about, it's better to rent because of some factors, or it's better to own because, yeah, it's your own property. So you as an experienced and a mortgage broker, and your experience in real estate, I'll just like to get your own advice on this. Like, when is the best time to rent? When is the best time to own? What are the pros? What are the contras?
Yeah. So let's talk about why you want to buy real estate. So the
Mm,
primary reason why you want to buy real estate is, and let me back up. There's three broad ways that we make money in this economy, the system that we've created. You have to
mm,
understand that economics is just a human created system, right? So whenever human
mm.
beings create a system, the people who create the system tend to favor the people who created it, right? So
True.
that's just reality. So there's three broad ways you make money in this world, right? There's different subcategories, but you can do it through real estate, you can do it by investing in
Mhm,
the stock market, or you can do it by creating a business, right? All those three things can create wealth. Now, predominantly, most the average person uses the home, right, as a way to create wealth. The reason a
yeah.
home tends to create wealth over the long term for most homeowners, and again, I'm not talking about investor, I'll get to that in a bit. For most home, I'm talking like someone who buys a home and they're going to live in there. Why is it that they
Mm,
end up creating wealth over the long term? In effect, a home is like a forced savings plan for them. They have a mortgage, and every month they are required to put money away into that home. They're also more
mm,
likely to do that because the flip side of that is they get a psychological hit in the wealth effect. Their house prices goes up. So it motivates them to keep putting down the mortgage payment. Now, most homeowners don't know if you get a 400,000 mortgage, they don't know by the end of that mortgage, you're probably going to pay twice what they actually bought the home for. But it doesn't
mm,
matter because humans, we're all weird. As long as the value of the home keeps going up, we will keep paying that mortgage down. Now, the reason they end up becoming wealthier is because at the end of 30 years, they will have paid down that mortgage, right? So now they have a little
mhm,
nest egg, like a savings, that now they can either sell it to create an income stream for themselves in retirement, or they could continue to live there during retirement and not have to pay rent. So now they have more cash flow to, go on vacation, take care of expenses, whatever it is, right? The renter has the same ability. The problem with the renter is they don't have a structure that forces them to put away their savings, right? When you
mm,
rent, most renters will just pay their rent and that's it. They don't force themselves to put away money. So therefore, when they get to retirement, if you're comparing a homeowner and a renter, the homeowner always comes out ahead. Not necessarily because they're making better investment decision, simply because the home creates a structure that forces the homeowner to put away money. Now, my
mm,
thing is renters can do the same thing once they're aware of that, right? So if you go to like most renters, and people are talking about like owning versus renting, the most common misconception is they try to compare apples to oranges, but they think it's apples to apples. And what I mean is most people, when you talk about renting versus owning, the first thing they will say is my rent is $22,000. I can get a mortgage for $2,000. That's an apple and an orange comparison. When someone owns a home, I am a homeowner. Just because I pay the mortgage doesn't mean I get to spend time in the home, right? I have property taxes I
yeah.
have to pay. I have to pay home
Mm,
insurance. I have to pay insurance for the home itself. So I have all these other expenses. So the misconception actually is for renters to know that you don't compare your rent payment to the mortgage payment. That's it. That's not a fair comparison. Remember, if I own a home and all I do is pay the mortgage payment, the bank will still foreclose on me because I have to pay other expenses associated with the home, like heating the home, property taxes. These are costs I have to pay to still live in this home. The renter then needs to compare the total cost of the rent. So if you're renting and it's $2,000 and maybe you have to pay utility, take the total cost of your rent, then find a comparable home that you want to buy and take the total cost to owning that home, not just the mortgage, the total cost. When you take the total cost of owning that home and the total cost of renting, what you'll typically find is that if you're in a high price market, like Vancouver, for example, in Canada, one of the most expensive
mm,
market, the renter
mm,
will always come out ahead. Why? Because if you take the total cost of owning that home relative to the rent, it's never going to be
mm,
the same because I have investment properties. I can't charge the same price it would cost to rent a home, the same price it would cost to own that home, because you wouldn't then rent. You would go, what's the benefit?
true.
I'm paying the exact same
Mhm,
thing, right? So landlords always have to go below the cost of owning a home. So that's the big difference there that people need to understand. And then once the renter understands, okay, let's say you're in Vancouver, like for example, in the course I do, the renter was saving almost $3,000 per month, right? Compared to owning that home.
Mhm.
But again, the
Yeah.
renter has to put some of that money away because there's nothing or no one that's going to say, "Hey, you got to put that money away," right? Remember the homeowner has a mortgage that requires them to keep putting
Mhm.
money away every month. So, once you
Mhm.
figure out the difference as a renter, you then need to create a savings plan. You then need to move some of that money into the stock market to help it compound over the long term. Then by the end of 30 years, you're probably going to have even more or possibly the same because we know the stock market has actually performed better than the real estate market over the long term. So you probably come out
Mhm.
just as ahead as your friend. I always tell people, think about this. Whenever you hear people online talk about retirement, what do they have their money in? The stock market, right? So the
Mhm.
renter just needs to
Yes.
understand the difference, understand, okay, am I better off renting or owning? And then figure out a system to force themselves to actually put away that money. The challenge for renters is that it's very difficult to do that because when you don't have someone forcing you to do something with money, chances are most of us just go, well, I'm not going to do that. I'm rather spend that money going out, eating out with my friends. I'd rather go on a trip. And they forget, like, wait a
Yeah.
minute, like in 30 years, your future self is going to go, why didn't you put away some of that money? And then when you get the
Mhm.
education, I find for renters too, just knowing that, because let's be honest, we do have a two-tier society. People who are homeowners, we tend to view them as more successful, and people who are renters, we tend to view them as unsuccessful. So psychologically, it doesn't feel good when you're a renter because it feels like almost like society treats you as a second-class citizen, but you just need to
Mhm.
understand the math, right? Once you understand the math, now
Mhm.
you can talk to your homeowner friend who, to be honest, most of them probably don't know the math, right? They're going off what their parents said, which is, and the common line I would hear all the time with younger folks is, why would you be paying someone else rent when you could be paying your mortgage and being an
Mhm.
equity? Like
Yeah, that's true.
in 1980, yes, but this is 2024. Have you looked at the statement today? Have you seen real estate prices? Have you done a comparison? So if we're gonna speak
Mm.
about facts, speak about facts. And my course isn't to say like I have a home. I'm a homeowner. I used to rent, but when we came to Canada, we rented the whole
Mm.
time until I was like in university.
Mm.
So I know what it's like to be a renter. But my point with that whole renting thing for anyone listening is really just do the math. Force yourself to do the math, and once you see the math, you will then understand how much savings, or you understand which one is better. In a lower price market, in a more affordable market,
Mm.
generally it's you going to be better for you to own a home because the two costs are going to be about the same. And if the two costs is the same, it's much better for you to own a home because you have the ability to leverage that home in the future. So long-winded answer there, but I hope that answers some of the questions.
Yeah, of course. Yeah, thanks so much for that. Yeah, elaborate answer. I mean, I really appreciate it because it's shines some light on, okay, what do I have to look into when it comes to deciding if I want to rent or buy. Like like if can just paraphrase a little bit from what I've understood, if I can calculate the total cost, paying the mortgage and all the insurance bills and the tax and everything monthly as for owning a house, and I can compare to my rent, if they are equal, then I could tend towards going but towards buying the house
That is
or buying
correct.
the property. Yeah. But if it's so high and I cannot afford it and renting is cheaper for me, like if I'm living in a very big city, for example, then it could make more sense to rent, but invest the rest of the money into stock, into the stock market,
That's
basically.
right. You can't just, as a renter, you
Yeah.
can't just say, "Oh, I'm better off." You need to be putting away something because if your friend owns that home, even though it's more expensive, in 30 years they're gonna have a nest egg and you won't have anything. So that's why it's important for the
Mm.
renter to put away something. You don't have to put all of it away because you may not be able to put all of it away, right? But just put
Mm.
something. Start putting that and be consistent and disciplined in it because every time you think about taking that money, just remember your friend has a system that forces them to put away money and they're going to come out ahead if you don't keep putting away your money every single month.
Mm. That's very true. Nest egg. That's the keyword. Yeah.
Hmm.
Building that up. Yeah. And talking about building up a nest egg, for example, for myself, I don't know if it's because I'm from Nigeria or whatever, but I would love to own a property. Like, I,
Yep.
it's just embedded in my brain already that I should buy a house and own one. And I would just like to know from your experience with working with Canada's largest banks, I would just like to know what to do or what to pay attention to when I approach the bank with, a request when it comes to real estate investment. Like when I go to the bank to seek for mortgage and all of that, what could the bank be hiding from me? What are the questions to ask so I can get the best of the best deal?
Yeah, when it comes to mortgages, and again, I'm in Canada, so my stuff is Canadian based. But however, generally banks are
Mm,
global, so they tend to have the same thing. It's just the products can be different, the different qualifications might be slightly different. But in general, I'm gonna do like a global view of this. Banks
yeah.
want to lend money to someone which they believe that person will pay them back. So when you go into the bank, a couple of things you need to think about is like your job stability is really important. Like, do you have a good job? How long have you been there? Are you still on probation? If you're on probation, it may be challenging for you to get a loan, right? Other things you need to pay attention is your credit. They always look at your credit. Credit just gives the lender an insight in terms of like how you pay your bill. So credit scores, I mean, there's a big talk about it, but really I would say if you pay your bills every month and you have a diversity of credit, what I mean by that is you have like a credit card, maybe you have like a personal loan, you're going to be fine. You're generally going to be fine on the credit side. Now, in terms again, the
Mm,
best rate, that one really fluctuates because different banks have different promotion. But what's more important for you to be mindful of is understanding that banks typically will qualify you, and this is pretty much global. Let's say you make $50,000, that's your gross income before
mm,
taxes are taken away. That's usually the
mm,
number that banks will take to qualify you. So what's really important where people get like we call it like home poverty, right? They buy a home but now they can't
mm,
do anything is because like when I was working for a company, I get, $60,000 or whatever, but what I take
mm,
home isn't $60,000. So what usually happens with banks, they approve you based on, like I said, you make $50,000 but you're expected to pay back the mortgage, right? On
mm,
less than
mm,
$50,000 because your net take home pay isn't $50,000. So that's where the
mm,
disconnect, that's where people really get in trouble is because the bank may go, hey, Toby, you qualify, you make $50,000, we're going to give $300,000 loan based on the
mm,
fact that they think you take home $50,000, but you don't take home $50,000. You
mm,
get paid $50,000, but then you have taxes and stuff. So at the end of the day, you might take home like $40,000, right? And that's
mm,
what you will use to then make that mortgage payment. So that's where it's really important for you buying a home to really set a budget for yourself and figure out based on the actual money that you take home, what do you have left over and what is the right amount of loan that can make sure you can pay that back and still do the things that you want to do like save for retirement, go traveling once a while, not have to eat noodles every night because you own a home. Those kind of things is what you want to prepare for. Um,
yeah.
but when it comes to more, it does I mean it's very because my information will be very specific to Canada, so I know we have a broad audience.
Mm,
But I would say
mm,
focus on like your job is really matters. Make sure you're not on probation. Make sure you check your credit. Make sure the credit's really good. And then obviously banks also have minimum down payment. Like in Canada, the
mm,
minimum down payment is usually 5% of the purchase price. And that's
mm,
typical in most places. They'll have what they call like an insured program and they'll have what they call non-insured program. So with the insured program in Canada, the minimum is 5% as long as the purchase price is under $1 million. So you need to have some
mm,
savings available. And typically banks want to see the savings, you've had some time that you've built it up. And then the other thing is just like I said, your overall financial picture yourself. Like, what do you feel? Because a lot of times I'll get a client approved for a mortgage of say $300,000, but we'll actually take maybe only 250 because that's the number that makes sense for them. So just be aware
mm,
that you don't have to take the thing that they give you approved for. They want to approve you for as high as possible because remember, banks make money off the mortgage. How? On interest. And if they
yeah.
give you a bigger loan amount, you pay more interest to them, right? So more income for them.
Mhm,
But you need to think about your
yeah.
personal situation. And I always recommend for anyone looking to buy a home is spend more time with, it can be a mortgage broker or it can be someone at the bank. It really doesn't matter. Just find someone that you trust that's going to give you the good
Mm,
information to work on that budget
mhm.
so you know what's the right amount for you to get approved for.
Yeah. Oh, thanks so much for that. Yeah. Like, I think you drawing out that, budget plan, like your monthly expenses, for example, like how much you take home actually after tax and how much you have to spend to live the life that you live and
Hmm.
how much is left. Is that enough to pay your mortgage every month? Yeah.
Yeah,
That's
and to be
good.
fair to you, Toby, like what you said, like owning a home, like I said, we all have that. I think home ownership is one of those things because a home is not just an investment, right? A home, that's what
Mm,
makes it so tricky, is because
mm.
you can say all the stuff about like, budget and all that, but when you start shopping for a home, it's the emotional aspect that comes up with buying a home. It's thinking about how
Oh,
proud
that's
you're going to
true.
make your family feel. It's thinking about when I'm going to
Mm,
have my kid in this home. It's all that emotional stuff that's going to make you make a terrible decision sometimes on that home purchase, because
mm,
emotionally we know as human beings we're more likely to make poor decisions financially so long as we feel good. So your trick is
mm.
really when you're looking to buy a home is spending some time and giving your emotional self some rational decisions, some cues, some things that you can just do, make it automated. And the best way you can do that is spending more time before you even go look at pictures of the home. Because the minute I was telling you, the minute you start looking at pictures, you're already hooked. You're already like,
Yeah.
it's gone, right? Because think about it.
Mm-hmm.
Why do people real estate or real estate agents spend so much time trying to cultivate to you in terms of like pictures and videos? Because they know if they can get to an emotional attachment to you on that property, you literally will buy it. I've had clients in the past that say, no, they bought a home because they wanted a swimming pool, and then they get the home, they realize we use a swimming pool one time a year, but they paid more for the house. That's what I mean. Because emotionally
Yeah.
at the time, they were thinking how, we're gonna have friends over, we're gonna do, and then nothing happens,
Mm,
right?
mm.
So
That's true.
spend some time understanding what is your emotional. And to give a little example, in my book, I mentioned that when I want to buy a home, I want to buy a home because my parents were renting. I hated how people
Mm,
looked at us because we were renting. So that was my motivational. That was my emotional trap. Because I had that
mm,
emotional trap, which is essentially I felt people didn't view my parents as being successful. In some way, I was dealing with emotional shame that came with
mm,
renting. I was
mm,
willing to buy the biggest house and do whatever I could to buy that home. I hadn't yet taken a step back to understand this is just money. It's a financial transaction. At the end of the day, I don't really care if I live in a big mansion, but if I live in a big mansion, but I can't, do the things with my family, I can't actually spend time with the people that I want to do, what is the point of the home?
mm.
I can't take the home with me when I
Exactly.
die,
No.
So that's what I'm saying. Spend a lot of times really being honest with yourself. You can lie to other people, just don't lie about why you really want a home. If all you really want a home is just to use it as a way to show you're successful, be honest about that, because that's probably going to
Mm,
mean that you're going to overspend on a home because your emotional driver is you want to use the home as a way of showing your success, which a lot of us do. But if you talk to people who bought
mm,
multiple homes, you realize it's literally just money. It really doesn't matter. And what matters, I always tell people, is like when you buy a home, it doesn't really matter at the end of the day. It's the people that are in that home because they're the ones who create that memory that makes you feel good. It's the neighborhood around. It's having all these different things that come with the home. But a lot of us,
mm,
including me as an immigrant, I want to use the home because I thought I didn't like the way people looked at me. They thought my parents were poor or unsuccessful. And I thought if I buy a home, I'm going to show them. Then people will have to see that I'm successful. But success isn't really
mm,
about buying financial asset. Success is understanding that you're successful and you don't need to prove anything to
mm.
anyone. Period.
Yeah. That's it. That's it. That's very valid. Yeah. I mean, if we start falling into this emotional trap, then we could, end in unnecessary debt,
Yep.
basically. And that's a big burden that we have to carry for a very long time 30 years, 40 years, 50 years, paying back that
Hmm.
mortgage. And yeah, that's what's making me remember your book right now. It's titled Master Your Mortgage. Um, so for someone who wants to, like, for example, go into real estate investments, for example, or just in general, start a business around real estate, are there like some tips or advice you could share with such a person?
Yeah, so in the investment, if you're looking to get be like an investor or anything with real estate, the biggest tip I would have for you is we don't care about any of the emotional stuff. You have to get rid of that stuff.
Mm,
So if you're someone who as an because as an investor, it's at the end of the day, it just comes down to the numbers. Like when I look at a property for buying, investing, it's completely different than when I'm shopping with my wife or my family because I said there's an emotional
mm,
element there, right? When I look at a
mhm,
property for investment, I'm looking more at things that I think can add value. I'm less interested about like, sometimes I go in a house where they have like a really nice kitchen. I'm like, I don't care about the kitchen because the kitchen doesn't really do anything to me. But if I'm shopping for my home, I might care about the
yeah.
kitchen. I still probably don't, but I might care about the kitchen. My wife particularly would care
Mm,
about the kitchen for sure. Um,
mhm,
but that's what I mean. As an investor, the biggest tip I can give you is spend more time being disciplined with your numbers. Understand that you don't want to over leverage yourself because in this game, if you get too over leverage, um, it doesn't really end very well. And then really keep
mm,
the focus on real estate is really about leveraging and income, right? So that's what you're trying to do is, leverage some of, the whatever capital you have to generate more of an income
mm,
stream. The reason real estate is such a good asset over the long term is that if you can buy a real estate property, and you have some rent in there, think about like you buying a single family home yourself, like buying a home, like you would be the one paying the rent.
yeah.
But if you buy a home as
Mhm,
an investor, you can have someone paying the rent, and then you could also double up and pay more of the mortgage. So essentially, you could have two people paying the mortgage down, and in theory, that's a very simple way to get to retire pretty quickly because if you're paying that mortgage down, then let's say it's supposed to be paid off in 25 years, maybe you pay that off in, I don't know, call it 20 years or even like 15 years. Great.
mm,
Now you can have free cash flow that's coming to you that you can invest it into the market to create yourself a little nest egg. That's why real estate has been creating wealth for so many people. It's for leverage and the fact that you have the income potential. So as an investor, we need to keep an eye on the bottom number. We don't care about the pictures. We do, but only to the fact that I care about the neighborhood because if I'm trying to generate as much rent as possible, I want to buy a property in a desirable area that people would want to rent in, not necessarily that I'm just buying a property for the sake of, whatever it is, but I'm really thinking about like who is going to be renting this place and what do they look for? Those are the things I pay attention
mm,
to as an investor. Less about like sometimes investors when they're starting out, they'll buy a place like it's their own. Like I'm not living there. I'm thinking about who could be living there and what do they want? What do
yeah.
they need? What's going to make it attractive for them
Mm,
to want to rent my place?
mm. Yeah, once you can put that in place, then you can start, building a business around real estate. Like if you could,
Hmm.
you know, yeah, ensure you can buy the right property in the right place without emotional attachments to it. That will lead
It's
to you spending too much money on it. Yeah.
Yeah, the it's what I said. It's even saying all that. I just want to be to people. It's always challenging. There's always times where
Mm,
I've had it, and it's very important to know that every investor, anyone who does in real estate, we all run into this because you can't completely be like unhuman, right? You're still human. It's just I always say I try to be when it comes to money stuff, I try to just pay attention to okay, what is it? What is it that I'm trying to accomplish? So if you say I'm gonna be a real estate investor because I want to use real estate as a way to, buy retirement, okay, great.
mm,
That's your objective. So keep that in focus when you're shopping. Don't start then going, okay, now I need like the biggest investment property. No, you don't. That was not your objective, right? So it's always easy. Or
mm,
maybe your friend comes on and say, "Hey, this neighborhood's gonna be so great. It's gonna be growing up." So now you over leverage yourself, right? So
mm,
keep to the focus because then over the long term, you're gonna be good. And real estate is the same thing. Usually, you need a 10-year cycle to make real estate
mm,
work. And in 2024, we also have to be mindful for investors like things have changed, right? So we've seen house prices gone up dramatically around the world. And what's interesting now for all investors, really, like the price point is really high. The question really is to what market you're in to ask yourself, is this going to repeat for the next 30 years? And if it does, who is buying these assets? And that's something that, I'm getting a little more
mm,
deep dive here, but that's something that we all need to start questioning because all of us think, okay, if it's $1 million now, then it's going to be 2 million. People don't ask the question, okay, where is the money coming from for people to afford the $2 million property? So some little tips for those of you, depending where your market is, find markets where you're able to put multiple units on the same lots. So, for example, there's a huge shift now what we call generational living. You and I are Nigerians, so we're accustomed to that. But in the developing world, they're starting to get that. What I mean by that
Mm,
is you have like the mother, the grandparents, they all live together on the same lot. So if you're looking for like
yeah.
a single family lot, a new strategy is really find a single family lot that you can build one or two or three units on there because that will allow you
Mm,
to generate
mm,
more income over the long term. So rather than buying one unit that you can rent to one person, now you buy a piece of land in which you can rent to multiple people. Also, other strategies you can look for is like look for what I call satellite cities that are like close to the main cities but are not in the city. So that can
mm,
be a city that's like, an hour away from the main city, but people love going there. You might be able to get cheaper real estate there. And then that can still build up your equity. And because people have an affordable issue, like people are struggling with being able to find home they can afford, they're going to be looking to these
mm,
satellite cities. So wherever you live, look at your satellite cities around you, cities that are about an hour to 2 hours away, and see if their price points are lower and then target properties where you have multiple units. Like if you find a land that
mm.
you can build multiple units, that's going to increase your return over the long term.
Yeah, wow, that's very valid. Multiple units. I'm going to keep that in mind also for myself for the future when I get to the point where I
Absolutely.
want to invest into that. Yeah, I mean, that's very valid. Thank you so much, Brighton. I've learned so much from you already. This is a lot to, take back home or just sit down back and reflect on to see, okay, what's my next plan, for the next 5 years, 10 years? What do I want to invest in? And when I want to invest in real estate, these are the things for me to do. You shed so much about that. You shed so much light on what we could do, to own our own property or maybe to rent our property. And even if it's just to invest in real estate as a market or as a business, you also shed so much tips on what to do in order to be successful there too. So I really appreciate it. Thank you so much for this wonderful conversation.
No, thank you so much, Toby, for having
Yeah.
me on. So thank you.
Yeah. Yeah. So if there's a way for people to connect with you or work with you, what would be the best way to do this?
Yeah, the best way to connect with me is to go to my website, wealthmarathon.com. On there, you have all the contact details. That's probably the best and simplest way for you to reach me. Just use the contact form on the website, and then you can get a hold of me directly.
Awesome. So I'll place a link to your website in the show note of this episode. So I encourage everyone out there to reach out to you. You can also get the book. It's available on Amazon and wherever books are sold. Master Your Mortgage is available. Thank you so much. I really appreciate this.
Thanks, Toby. Thank you so much.
Wow, you made it to the very end of this episode. Thank you so much for listening. I'm grateful for your time, your love, and your contributions. Subscribe, like, review, and share this podcast. God bless you. Bye. Bye.